Hey Tax Goddess community, we are on a mission here to hit 100,000 subscribers, but we need your help. What we've noticed is right now about 81% of you are watching our videos, but you're not subscribed. If you're enjoying the content and finding value in it, please hitting the subscribe button would make a huge difference in our channel. It would help us grow and reach more people who desperately need our tax strategies to keep their money in their pocket, just like you guys. So it only takes a click and it continues to help us bring more of the content that you love. Plus, of course, don't forget to like and share for anyone that could benefit from the tips that we provide. Thanks so much for being a part of the journey with us. Hey guys, today I have an interesting topic. Well, I mean, I find it interesting because I'm a tax nerd, right? So what do you do? So opportunity zones. Okay, now if you don't know what an opportunity zone is, this was about 10 years ago. The IRS, the federal government, put out this opportunity zone. It was an investment type vehicle where if you had a capital gain, so if you sold a building, if you sold a business, you could roll that gain, you could roll those proceeds into an opportunity zone, which was investing in some piece of real estate that the federal government wanted to improve. Okay, so these were often downtrodden areas. They were buildings that were, if nobody did anything with them, they could have gone badly, into disrepair. So the federal government created these opportunity zones all over the country, all over the US, and basically said to investors, listen, if you have a capital gain and you put that money into an opportunity zone, we're going to give you 5, 7, 10 years worth of tax-free. You don't have to pay the tax now. You get some tax-free earnings. And on top of that, you also get a 10 or 15% basis step up when you go to sell. So basically, you're going to get an additional 10 to 15% that you never have to pay tax on. So that was hot potatoes, right? Everybody who has any kind of capital gain was throwing it into these opportunity zone investments. Time's come and due, okay? The deadline, the tax due on any qualified deferred gain is now due on December 31st, 2026. So we're still right now as of filming, this is 2025. So now is the time to start planning. We only have 3 months left in 2025 and of course 2026 to create any losses, to offset that tax that is going to come due in 2026. To offset that tax with other strategies, other ways to get out of paying tax. Now, doing the opportunity zone investment was a great move, right? But right now, if you miss these crucial deadlines, if you miss these details, you're about to make a huge mistake. So the most critical mistake, number one, is ignoring that December 31st, 2026 deadline. Okay. Now, for many people, they're going, Shauna, that's a year, that's 15 months away from now. Okay. Depending on how large your gain was that you put into the opportunity zone, there may or may not be programs that are running out to be able to get you alternative investments, alternative deductions. So good examples for 2025, if you're trying to create like a large NOL that you could offset in 2026, you need to do that in 2025, right? Because there's something called an excess business loss, EBL. And you cannot take, even if you created, let's say, $1 million worth of losses by doing investments in 2025, you can only take a maximum amount, and that EBL for a single, even my dogs are worked up about it, a single individual is about $300,000 and a married couple is about $600,000. So if you create $1 million loss, that EBL, if you do it in 2026, you're only going to be able to deduct $300,000 or $600,000 against a $10 million business sale that's going to come due in 2026 because of the qualified opportunity zones. So what you need to be looking at here is if you were using the qualified opportunity zones, you want to be creating any EBLs in 2025, because the cool thing about an EBL, an excess business loss, is that when it rolls to 2026, it automatically becomes a regular NOL, a net operating loss. And you can use that to offset your qualified opportunity zones that are going to come due December 31st, 2026. So even though you think you have 15 months, You really don't. You really, really want to be creating whatever losses, whatever you need to do this year in 2025. Now, a lot of those investment opportunities in 2025, getting into oil and gas, getting into historic preservation easements, getting into 179 deductions, this kind of thing, these are only available for as long as they call it, as long as paper exists. There's only so many dollars that are allowed to be invested into various investments across the nation. So if you wait until December 31st to kind of see how things are playing out, there may not be any paper for you to even invest in to be able to create the EBL, to be able to create the NOL for 2026. So I realize we're playing a very long game here, okay? But, long games are what we do, right? The tax burden happens year over year over year. And especially if you have a one-time hit of a big dollar amount, we want to be able to figure that out now, not then, okay? So step number one, do not ignore 2025, December 31st, 2025, and December 31st, 2026. Now, secondly, big mistake here, people have kind of forgotten that there's extra benefits here. You have a 10 and or 15% basis step up that was created depending on when you invested into the opportunity zone. So if you've switched CPAs in the meantime, if your tax strategist wasn't your tax strategist 10 years ago, they may not know about this. They may not know when you got in. They may not know the details, okay? So you definitely want to make sure that you have all of your records to give to your current preparer, your CPA, for the 2026 tax return. Make sure you're getting your step up in basis. And then, of course, on top of that, you've got this super powerful benefit, the tax-free appreciation over the last 10 years, okay? This, for many people, this was the core reason to make an investment into the opportunity zones. So this is still alive and kicking, okay? Opportunity zones, you may not get that basis step up, but you still have tax-free growth, which is pretty cool. So if you have a sale happening now, make sure you're still looking at opportunity zones, right? What kind of options are there until that December 31st, 2026, okay? Now, there are some new rules, okay? Recent legislation has made this program permanent. Yay, we love the opportunity zone, but there's a new rolling 5-year deferral for investments after December 31st, 2026. So if you've got long-term, goals, long-term sales plans, this kind of thing, you can, of course, plan, which is great, assuming the rules don't change again, but you can, of course, now plan for a new rolling 5-year deferral for these new investments, and of course the tax-free appreciation that comes along with it. Now, as anytime we get something good, we also get something a little harder, right? So the new law also has stricter reporting requirements and new opportunities built in for more rural investments. So don't ignore those, okay? There's some really cool things that were added by the BBB, right? The One Big Beautiful Act. So if you are selling something, currently, if you've historically sold something, if you've got a big capital gain and you're not sure what to do with it, you may want to look at the opportunity zone investments. They are still alive and kicking. So these are some great opportunities. All right. So if you'd like to schedule a call to review your historical opportunity zone that's coming due December 31st, and you need some alternative strategies to now again either defer and or never pay tax ever again on that capital gain in the first place, reach out to our team. That's what we do. Okay. So strategic tax coaching is exactly the types of things that we think through. All right. So I would love to hear from you guys from that standpoint. What is the most exciting part? Obviously, 10 years ago, if you got involved in an opportunity zone, 2019 and earlier, these have the 10 and 15% basis step ups. Are you most excited about that? Or are you most excited about the tax-free earnings? Which one? I'd love to hear. So let us know. And of course, if you have questions about opportunity zones, reach out to our team. So have a great day and we'll talk to you soon. All right. Thanks, guys. Bye.